Hi there, welcome to the channel. So I wanted to take a look at Shift Technologies. This is one of those new companies that basically sells cars, and they all have their different, way of doing it. And so I guess me, Kevin, was looking at the stock, and so I wanted to just kind of take a minute here to kind of look at it and see what's going on. What we see here is this is on a weekly chart, and we can see that really this thing had basically was in a situation on the weekly chart where it had held this area of 6.5, and then basically at some point it broke down in November, got the crap kicked out of it, and now it's kind of like down here. You can see it's kind of like picking an area where it may finally be finding some support. So what I wanted to do is that's just a terrible chart. I mean, that's really just terrible. But one of the things I want to do is look at it and say, well, okay, if you're looking at it and someone is saying like, hey, we should buy Shift Technologies or look into it because it's a great company, whatever. I think one of the things to do is to like kind of look and see what other companies are in that. So like I pay for one of the IBD things, and they have these different groups and stuff. And one of the leading companies is called PAG, which is Penske Auto Group. And one of the things to kind of keep in mind as well, if now that I go to Penske Auto Group or Auto Nation, other companies that are also have, maybe better financials and that are in the same group, basically at the end of the day, although, Shift may be a different model, it may be better, may not be better, whatever the benefits are of that, they're selling cars. Okay, so apparently they're selling cars. So, just let's look at it compared to the other ones. So you have a chart here, you have this chart that's gotten the crap kicked out of it. And then over here, you got Penske, like this stock is in an uptrend, so it looks really good. Auto Nation is another company, and this as well is looking really good. And it's kind of interesting because these stocks here, you see how it's come down to the 200-day moving average and starting to put in a strong up week. So that's kind of, positive for that. And then another stock in this group is, let's look at this guy. Driven Brands is another one. And let's look at this on a weekly. So this is a more recent one. Like even this one is basically, let's see what's going on here. This one here, this is interesting. This is a more recent IPO, obviously, and we can see that kind of have this channel going up, kind of, sort of wedgy looking thing. It's at least it's kind of moving up. It's not getting the crap kicked out of it, but it did. From its IPO down here at 22, it got all the way up to 35, and really did have a pretty strong down blast there. So at least it's on more of an uptrend. So it's kind of interesting. So if I look and compare these car companies and look at all of them, they're Auto Nation uptrend driven, somewhat in sort of a not as great, but still uptrend. And then looking at Penske, uptrend. Okay, that's good. And then we look at Shift, and it looks like dog poo on a stick. So it's telling you something. So obviously, like this company is getting the crap kicked out of it. Now, I looked through the financials, and I didn't really see anything super bad there. It seemed like they did have an increase in earnings, et cetera, but they definitely are much smaller maybe than these other companies. So the question now is like, if I wanted to buy some of this and this would be like a high risk flyer is the way I would kind of think about this one, because what's going on here is, this is a company that it broke the support at $6, and it's been nothing but down. But let's look at what's going on now. Now, what you have here is you've really kind of found support here, right around this $3 range, this low. And what do you see here? You also have this, what we would call, you could call it a W. So basically you have this kind of situation where you have a W like that. Now, the key to like a W type thing is, will it break out of this mid-range? Because this is an area of resistance. And if it's able to break out, so speculating, if it's able to break out, then it could potentially start moving up. So that's kind of the key thing. So if looking at this, this particular point right here is, call it 375. It's like right at the top here, somewhere between this top of this wick, which is at like 360. Let's just see, do that. Okay, so the top of this wick here, the high was 364, and then the high here was 363, 363. So 364, the highest that this is traded in this W period, 364. So basically, if it breaks above that, so now you can pick some numbers. So let's say this is not financial advice. So now speculating if we were going to take a flyer on this, and I'm thinking about it because this is like way oversold. I mean, this thing has gotten the crap kicked out of it, and we'll have to go check the short interest as well. But for right now, let's just say if I was going to take a flyer, I would try to put something in to buy above the previous high, which would be 364. So maybe I would do like, give it a little room, 369, something like that. One of the issues that you'll have is, pre-market, if it gaps up, et cetera, you want to be careful with that thing. So, it's sort of like, if I put in like a trade trigger type of a thing, I wouldn't do that. Just every morning before it opens, I would look at it, see where it's trading, and then look for trying to get it when it breaks, that high of 365, 366. Then that would be the area where I would put some on. That would be kind of my bet. Then in terms of, what the return would be, this, of course, once again, this speculation, but, if you were able to get it here, let's call it 375. So if you got it at 375, you are going to start getting some resistance in this area here, right? This area here is going to be resistance. But what's interesting too, is like, then really the rest of your big resistance is kind of up here in the $6 because it just traded. So there's not actually that much resistance here. So this is why it's kind of an interesting and intriguing kind of trade, because like, hey, if this thing breaks up, yeah, if it's able to get some momentum and cross through this area of resistance, this thing really could kind of just go right up into the $6. Now, would it gonna break out between there and go up higher? Really doubt that. But in terms of like hacking at it with a little bit of gambling money, I'm starting to think maybe I might do that. So that's kind of what I'm thinking there. But in terms of a longer term, this is terrible, right? This is terrible. So I wouldn't like hold this. So I don't know if the Meet Kevin guy is holding it or what he's doing, but definitely it's just gotten the crap kicked out of it. And it's got the growth and stuff, but it just, I mean, what would have been better? I mean, so a year ago, if you were bought Penske Auto Group, you would be in better shape. If a year ago, so it'd be at $60, and now you're at 100, so you made $40 on it. So you'd be in much better shape than having Shift. What about AutoNation? Same kind of deal. You'd bought a year ago somewhere around 70, and now you're at 117. You'd be better off. So even though these other companies don't have some new kind of model to them, there was definitely, they would have paid off better for this year. Here's another one, Group 1 Automotive, and 125 to 195, and compare that to Shift. So I think, there's several points. So to summarize, the point is Shift has performed horribly this year, just terribly, and it's gotten the crap kicked out of it. Why? Don't know, don't care. It's what happened. The market is always essentially right. It does what it does. That's just the way it works. In terms of a short-term play, because this thing is oversold, yeah, there's a play there. There could be a play there. And once again, not financial advice. Okay, yes, we do have a short interest on Shift. So I'm not paying for the big service. So of course, this is like older data, but as of 12/15, you had 3.5 days to cover going back in time. So your short interest was 15 million shares. Average volume was 4 million shares, gives you 3.5 days to cover. So this isn't super great, but this isn't that bad either. Now let's go back in time. Interesting here, you have 12 million shares on 10/15, 12 million, 13 million, 13 million. And then the short interest is now cranked up. So you see the short interest volume has gone up. The amount of shares shorted has gone up in this period of time. Now it had peaked out earlier at 15, almost 16 million shares. Interesting. And then it came off and went back up to really that 16 million shares. So if we look at that 16 million shares, it was on August 31st. What was happening there? June, July, August 31st, that would be in this range here. So you can see that when this was reported, that short interest, you did have a run here. See, you had a run from 7 up to 775. Not much of a run though. So where we're at, we got like 3-4 days to cover. Now, interesting here, see, you had less shares short on 10/29 report date, but 9 days to cover because the volume was a lot less. So the volume has picked up and that just lowers it. So two things could happen. One could be if the volume drops off, you could in effect have a lot more days to cover, right? Which would push towards a short type of squeeze, right? Basically, the more days to cover, the more shares short, it kind of indicates the potential for a short squeeze. So because what this means is at the average daily volume, it'll take 3.5 days to cover all the shorts, right? So that if there was no other volume, if all the volume was going exclusively to short covering, it would take 3.5 days. So that's kind of what you're looking at when you're looking at for like a short squeeze. That's the type of thing. But you have to kind of be careful as the volume, daily volume varies, this number changes radically. Because here, when we only had 1 million daily shares, 1 million shares a day trading, you had 11. Oh, that looks like a great short interest. Well, sure, but then the volume picks up and then it's not so clear. So that's kind of what I see for shift technology. And so to summarize that, then, there is some short interest on this thing. If you're going to look and buy a stock, okay, that's fine. You're seeing a tip and you're getting it from someone. I would go and try to look at other companies in the group. You should really do that, because if you're looking at that and you're seeing that, hey, I'm going to buy Shift and it's this great new model or whatever, just ask yourself these questions. Go find other companies in that group, and you can pay for a service for that. Like I use like IBD for that. But look at this. This was Penske. So, you were in much better shape if you had Penske. So just kind of keep that in mind. So I think that's it for this one. Talk to you later. Bye.